Today we're talking about the benefits of owning versus renting. Welcome back to the podcast. My name is Alicia Sanchez. I'm here with Tom Krieger. Today we're going to be talking about the benefits of owning versus renting. And the first thing we're going to dig into is the mortgage payment versus a rental payment.
I wanted to share with everybody is that if you have a $2,100 a month rent payment, which is not unheard of these days, that you could actually own a home that was worth $300,000 and actually pay less for your mortgage payment than you're paying for your rent payment. So in actuality, on a $300,000 purchase at a 6.25% interest rate, you'd be paying about $1,877 for the principal and interest. In our area, the taxes on that would be about $123 a month, and your insurance would be about $50. That nets you out to about $2,050. So $300,000 home ownership for $2,050, and your rental payment is $2,100. Now, what's interesting about that is that of that payment, your mortgage payment of $1,877, about $300 of that payment goes to buy down the principal balance or the amount that you owe on the house, right? So it's kind of like putting it in the bank. You're just paying down what you owe, so that means you have to pay less, right?
Right.
So that's about putting about $300 roughly a month in the bank. And over a 12-month period, that's like having $3,600 in the bank.
Wow.
Because you bought down your borrowed amount. Now, here's the best part, and this is what I try to express with people. Right now at 6.75% interest rate, $1,877 would be the principal and interest rate. But if you could buy down that rate, and we can show people how they can get the seller to help buy down the rate to 5.75, you're only paying $1,689. So that's a savings of about $188. It gets added to that $300. So now you're just short of $500 a month you're able to kind of put in the bank. In a 12-month period, that's almost $6,000, right?
Right.
So just looking at things like that, well, you know, a mortgage payment, I'm obligated. Here's the one part. You're obligated to pay that payment of $1,877, right? You're obligated to have taxes, which is about $123, as I said, and you're obligated to have insurance. The total payment, again, is $2,050. But it's $2,050 this year. It's $2,050 next year. It's $2,050 the next year. It's $2,050 the next year, all the way down. Now, there will be a little increase probably for property taxes because you never fail to have the government reach in our pocket a little bit, you know, every year to raise it up. But in general, it's going to stay like that. Your rent payment, on the other hand, at $2,100 will probably go up 5% because that's the industry average is raising rents about 5% every year. So your $2,100 will go to $2,200. Then the next year it'll go to $2,250. Then the next year it'll go to $2,350. Then the next year $2,500. Then the next year $2,600. So over that 5-year period that we're just talking about, you're going to pay about $31,800 more in rent payments than you would be paying in your fixed rate mortgage.
Does that ever change?
No, unless you refinance it.
Okay.
Now, if you refinance it, like I said, you go from $1,877 down to $1,689. Now, I'm talking about principal and interest. I'm not talking about the whole payment.
Right.
Because the taxes won't change, insurance probably won't change. Or if they do, they're going to change just a little bit based upon the economy. But in general, if you can bring your interest rate down, you're going to save that much more. So you could get your payment to go lower. Obviously, you would never refinance for a higher interest payment. That just doesn't make sense. But statistically, if you look at what I just talked about, and I know these are a lot of numbers, and I don't want people to get caught in the weeds, but the net bottom line is you're going to save in just making rent payments, increased rent payments of $31,800. And in addition, you're going to put, and this is the best part, you're going to end up putting $53,800 into the bank by paying down the principal on the house. So if you add those two together, it comes up to about $84,000. Oh, and by the way, the value of the property is increasing. On average, over the last 10 years, property values have increased about 7.7%. But let's be conservative and say that your property value is going to increase by 5%. That means that you're going to also have an increase in property value of about $83,000.
$83,000.
So you take the $83,000, you take the $53,000, and you've got what? $136,000 worth of wealth built up in just a 5-year period when you're a homeowner versus a renter.
Yeah, I mean, this is a great idea, especially for first-time homeowners. I don't see why anyone would not want to do that.
Well, you know, that's kind of interesting that you bring that up. You know, some of the ideas that people have, and I call them ideas, are problems for them, but for us, they're ideas. Why don't I become a homeowner? Well, I don't have the down payment. Well, a lot of that can be solved by down payment assistance, right?
Right.
Another one is, my credit sucks. Well, guess what? We're able to get you with somebody who can get your credit repaired so you can become a homeowner. Another one might be what we call termination penalties, right? Where somebody's got to pay maybe 2 times their rent to get out of their lease early. We're able to put that aside and help that buyer get that neutralized by concessions from the seller. You know, another issue may very well be that people just don't want to move. Well, you know what? If you can get some concessions from the seller, maybe you can pay the movers to move you. So there are ways, if you really want to get out of renting and you really want to get into home ownership, it can be done. In some cases, it may take a little, take a few months if it's a credit repair. A lot of cases, though, if you're willing to take a starter home and be willing to work into a starter home, and right now $300,000 is about a starter home here in Tucson, Arizona, people will be willing to go forward. And then if they're not willing to go forward, sometimes you just take the horse to water if they don't want to drink. Hey everyone, we want to interrupt this episode to let you know that we are a Keller Williams Southern Arizona franchise.
We are also realtors practicing equal housing. Now let's get you back to the podcast.
Okay. And you did kind of go into the wealth building, right, and increasing your net worth through this as well. And what about the maintenance costs, when you're a homeowner versus when you rent? What does that look like?
Statistically, they say that you should put away about 5% of what your mortgage payment is for maintenance costs. So if we use roughly the $2,000 value, $2,050, you're going to put about $100 away, maybe $110 away every month. At the end of the year, you're going to have $1,200, $1,300, right? You may use that for some painting. You might use that for some window treatments. You might use that for some screening. You may use it for landscaping. You may have to, have some maintenance done on your HVAC unit. Okay, termites if you're in an area where you have termites. Gutters, taking care of your gutters, hiring somebody to clean the gutters if you don't want to do it yourself. So little maintenance, things like that. The big ticket items, though, I would recommend, and I think you do that as well as being a great buyer's agent, to have the buyers get something called a home warranty. Now, they're usually between $650 and $750, depending on where you are in the United States, but they'll take care of all those big ticket items like your refrigerator, your stove, your microwave, your washer, your dryer. Sometimes they'll add a rider on for pools. It'll take care of your HVAC. So if those big ticket items, hot water heater, I don't know if I mentioned that. If those big ticket items, it'll take care of those. Now you have a small deductible somewhere between $50 and $100, again, depending on the policy and where you are in the United States. But those are the things that will prevent you from having big ticket items. So that 5% maintenance is more cosmetic kind of stuff, and or you could take that $100 a month and save it until it's time to buy the warranty and use that money for the warranty. So there is some cost with home ownership, but here's the best part of it. Again, the value of the property keeps increasing, and that's nothing more than money in your bank. It's almost like forced savings for somebody.
Yeah.
Yeah.
Okay. Thank you for clarifying that.
Yep.
So just making sure that we're taking the right steps to protect ourselves and our home. Okay.
Yeah.
And something when you buy a home is you can make that your own, right, without any repercussion.
Yes.
Right, like you would when you rent.
Exactly. You're exactly correct. So as a renter, you can't add a bathroom. You can't change a bathroom out. You can't do a kitchen remodel, right?
Right.
If you want to add to the house an addition, right, you can't do that usually if you're renting. Even if you're renting a single-family home, unless you're a dummy, okay?
Yeah.
Why would you spend the money to add an addition on a single-family home? Now, if I'm the seller, or I'm sorry, if I'm the owner, then what I want to do is say, yeah, by all means, pay $50,000 for that added bedroom. It's not going to happen, right? It's just not going to happen in a rental. But if you want to change things like carpet, or you want to change the paint on the wall, or you maybe want to change the window because I want a bigger window because I could view the mountains, or I got some fantastic sunsets, you're not going to be able to do that in a rental property.
Right. You don't have that freedom to, customize it the way that you would like it.
And then if you have your own home and you're a pet lover and you want to have dogs or cats or turtles or rabbits or whatever, you can do that in your own home.
Yes.
Not too often in an apartment, unless obviously it's a service dog,
Right.
You know that.
Yeah, typically in the apartments, you have to pay additional fees for your animals.
Yep.
There's usually limitations in the lease for any visiting animals as well. So yeah, there's a lot that goes into renting.
Yeah. And so because you were, in the rental industry, that sometimes there's even the size of dogs, right? You can only have something like 25 pounds or less, or no greater than 50, those types of things.
Right, and certain breeds that you can bring.
Yeah.
So yeah, when you rent, there are things that you have to consider as well. Oh.
So let me ask you a question.
Sure.
Since you're here, okay? We're going to turn the tables here a little bit on Alicia. What are you finding, Alicia, from your years as a property management person, the things that you're almost uncomfortable with having to do when there's a tenant that you have to deal with?
Yes. So working in property management, one of the uncomfortable things I had to do was reach out to residents, and it could be a call about their patio, their front door, and basically just telling them to clean it up. In property management, we have to follow the lease agreement, and that lease agreement can include your patio needs to be clean, there can't be any toys, you can't even have a pop-up chair. So that was something that was uncomfortable for me to have to do because, everyone should have that freedom to customize their own space. That's where you're living. So I would say that's something.
Did you ever have an issue where you had to call up the tenant and say, your music's too loud, your dog's barking?
Yes.
How did they take that?
Plenty of times. They understand they're living in a rental, but, when you're trying to just have fun with your family and you have the music up a little bit, you don't want to get a call, someone telling you, hey, turn down your music, or hey, your dog's barking too much. So it's kind of like a violation of privacy.
Yeah.
Yeah.
I can imagine, it's been so long since I rented, but you're paying your rent. You think I should have the right to have some freedoms here,
Right.
So I'm having family members over, and if your family is anything like mine, we want to talk over the other person.
Right.
So the volume starts to creep up a little bit, right? Or if you've got a dog, maybe it's a new puppy, and you're trying to train that dog, right? Sometimes they bark a lot, right? So in your own home, you don't have to worry about that.
Right.
But as a tenant,
exactly,
it sucks,
you have to.
right?
You have to consider those things. We went over a lot of benefits of owning a home versus renting, and it truly does seem like buying a home is going to be in the best interest.
Yeah. And if you want any more information about, how you can get down payment assistance or work on your credit or getting some seller concessions, look down below. There's our number and our information. You can reach out to myself or Alicia. We look forward to hearing from you.
Thank you for listening and watching the Nitty Gritty of Real Estate podcast here with the Tom J. Krieger team of Keller Williams, Southern Arizona. If you are interested in buying a home, selling a home, or even investing in real estate, we have 5,000 agents across the country that we can connect you to. If you need any free resources, feel free to check out our website at www.thetjkteam.com. We hope you have a great day.